Hi guys, welcome back to the channel. My name is Dave, and today we're going to talk about SCHD from Schwab. This is an ETF that everybody asks me about all the time. What do you think about SCHD? Well, we've been building out this income portfolio, and I would define SCHD as a dividend ETF, but our income portfolio is begging for kind of an anchor in there. So I figured maybe this can anchor that whole portfolio. We can kind of see what the overall return looks like when we add a dividend ETF like this into that portfolio. So review it, see how it holds up against our income ETFs. If that is what you're looking for, please stick around. Whoop. First off, Friday. That was fun, right? I mean, Jerome and company, they're out in Jackson Hole. They're enjoying a nice fly fishing trip, right? They take off their waders, they put down the fishing gear, and they come in. And look at that. In an 8-minute speech, they make rich people a little less rich. Now, for us, that just means SCHD goes a little bit on sale. Now, I had actually positioned my portfolio. I've been bearish for a while. We talk about that. I've been talking back and forth with a few of you, and I've been kind of bearish. So I had 12 SPY puts going into Friday, and they paid off pretty well. If I was more patient, they would have been even better, but I wouldn't call it necessarily smart. It was kind of just a lucky ordeal that I ran into there because it could have gone either way. Honestly, we didn't really know, but I'd call them spite puts. I was being spiteful, and either way, it doesn't deter us, right? We're going to keep plowing forward. So this is going to help us because now our test subject, SCHD, is just a little bit cheaper for us to buy. So let's dive into SCHD and see if now that Jerome is done talking for a little bit, we can see if this is a good one for us to add to our portfolio. SCHD is the Schwab U.S. Dividend Equity ETF. It's got an expense ratio of 0.06%, which simply means that for every $10,000 you invest, they're going to take $6 out to manage that fund. Now, this fund focuses on the total return of the Dow Jones U.S. Dividend 100 Index. And it's a low-cost fund with a diversified portfolio that tracks an index focused on quality and sustainability of dividends. So it's focused on those dividends. It picks these stocks based on financial ratios relative to their peers. So all of this information is right off their website. This fund did start back in 2011, so it's been around for a little while. It's got about $39 billion in total net assets. See, it's got 104 different holdings, so fairly diverse, but that's not a whole lot, 104. The distribution yield down here at the bottom, 3.26% for the last 12 months, TTM, trailing 12 months. You can kind of see the fund characteristics. So when I think about this type of fund, I'm thinking good value stocks that pay dividends. They typically make money. They've been around for a long period of time. That's why we end up with a price to earnings ratio of 14.38, price to cash flow of 10.39. Price to book ratio of 3.27. So grounded in fundamentals. Now for the rest of this review, I am going to be using Seeking Alpha, and I am an affiliate. I have to mention that. They are running a special right now, and I'll link this down in the description, $99 for the year. Still kind of expensive, but you get a lot of great information with this. So if it's right for you, great, sign up. If not, just ignore this. I'll talk through it a little bit, though, as we go along. So I've been using Seeking Alpha now for a long period of time, and I've always used the free version. Now I've got the paid version, and I do like it. It's kind of been my go-to. I also use Fidelity. I also use E-Trade. So lots of places you can get great information, but I think they do a great job of bringing it together. And if you like things like YouTube, where you find your financial information and stuff like that pulled together in a video like you're watching right now, you might also find that you like something like Seeking Alpha, where you can pull up SCHD, you can follow along, you can add it to your list here. You can see analysis and breakdowns from different authors. You can also see news all there together. So this is kind of the home page. You've probably seen it if you watch financial videos, and this is for SCHD. So you can see it had a rough Friday along with every other stock out there. They do offer little pop-ups here, which are nice too. So if you're not really familiar with it and you're not like trailing 12 months, what is TTM? Well, that kind of spells it out for you. So they do a good job of presenting the information that way. 1-year chart, a lot of the information we already talked about. So let's jump into holdings and take a look and see what they have. Now, when it comes to the breakdown, it's pretty diversified, right? We got financials, technology, industrials, consumer, defensive, and healthcare. And those are all over 10%, all the way up to 20%. So financials being the largest. And then it still breaks down here into energy, utilities, basic materials, and some of these other areas as well. So pretty broadly diversified overall. And if we look at the top 10 holdings, we're going to see Texas Instruments at almost 4.5%. Pepsi, Coke, Home Depot, Cisco, Amgen, Merck, Broadcom, Pfizer, and IBM. And those top 10 holdings make up 41.5%. So focus on these top 10, that's almost not quite half, but 41% out of those 104 holdings. But if we want to look at all 104 holdings, we can. I'll roll them right now. And as we cruise past those top 10, you're still going to see stocks that you recognize, 3M, Altria, US Bancorp. But you're going to start seeing that weight go down and down. They're going to have less of an influence on this overall. Feel free to pause this, take a look, find your favorite stock. But just realize as we get down to the bottom, you're going to have to trust their selection process a little bit within this ETF for these 104 holdings. But altogether, 104 holdings, and here they all are for your viewing enjoyment. So let's jump back over to Seeking Alpha and finish this off. And we're going to zip down through some of these just to kind of show you what it looks like. They do have a quant rating here, strong buy 4.58. Lots of green for SCHD at the moment. So they've got ETF grades as well. If we look at those expenses, again, 0.06%, very low compared to the median of all ETFs. Dividend, obviously an important tab for the Schwab US Dividend Equity ETF. In this case, it's showing 3.27% dividend yield. Now down here, you're going to see a dividend yield forward of 3.79%. That's a little misleading because that's based off just the last quarter, which was 70 cents. That was paid out on 6/27. This one's paid every quarter. A lot of the ones we've been looking at have paid out every single month. You have to wait a whole quarter for this one. Has had nice growth over the last 9 years, so that's pretty impressive. So when you buy this, you can expect some growth, it looks like, going forward. Dividend history, they have different tabs in here as well. You can jump over to the dividend history and you can see that 70-cent one was kind of outpaced the last few, but you can kind of see the growth that they've had going back to 2017. So pretty impressive overall. Another tab that I like here on Seeking Alpha is the Peers tab. So if we come over here, we're going to be able to see a breakdown between this and some other dividend ETFs. So one that I've always owned myself is VYM. I probably have about 300 shares in my own personal portfolio. I've also done a video on that. I'll link it above. In HDV, I'll link that video as well. Both good funds. Now SCHD and VYM, 0.06 to 0.06. Very similar. This one's Vanguard. It's a slightly larger fund, but both highly rated. So I want to take a look here. We'll look when we look at charting, and we'll compare SCHD to VYM. But both great dividend ETFs. And again, I always talk about making a nice soup. If you're trying to build out an income portfolio or a dividend portfolio, why just SCHD and why not VYM? Why not a little bit of both? I think you can't go wrong if you start mixing a few of these together. Now, if we go over here to options, SCHD does trade options. We've got a little options tab here and gives a nice little breakdown. So I can come over here and take a quick look and kind of see what the open interest is, which is nice to have, the volume, bid and ask, and everything else. Now, let's jump into charting and start taking a look and comparing SCHD to a couple of other income ETFs and dividend ETFs. So first, let's look at SCHD, and you can see the price return relative to the S&P 500. It's done quite well. So when you take a bunch of great value stocks, dividend-paying stocks, these things that have been around for a long time and make money, right? You're going to have a very solid product that doesn't necessarily have the beta that you're going to have in the S&P 500. It's not going to move all over the board. So your down days aren't going to be as bad, and your up days aren't going to be as good. It's going to give you that nice, solid performance. So over the last year, 3.67% versus 9.22%. And this is the price return. So exactly where the stock moves. Now we can switch this over and say total return. They give you lots of different options here, but let's look at the total return. So total return, SCHD, down about 0.5% when we factor back in the dividends that it pays out, and the S&P 500 at 8.67%. They also make it very simple for us to go over here and go add comparison. So we're going to go over here and we're going to click on VYM, and we're going to add that in. And we're going to see, we're going to compare that to this one. So now we got VYM here in the purple, and it's just slightly better. So up about 2.24%. And again, this is the total return. So when we factor back in that 3%, 3.5% dividend yield, VYM's outperformed over the last year versus SCHD. If we go to year to date, again, VYM about 4.3%, negative 4.3% in this bad market that we've had. SCHD is a little bit lower at 6.58, but they both outperformed the S&P 500. Now, if you go out further, let's go out to 3 years. Now, suddenly it's flip-flopped a little bit, right? Now, in that bull market run, because now we've included about 2 years of that bull market, 2.5 years, 2.25, right? Now I've got a 57% return in SCHD, 48% in S&P 500, and 37.9% in VYM. again, so different markets, it's going to perform differently, right? So how are they going to hold up with their different cocktail of stocks that they've got in that particular ETF? And just for fun, since we've been talking about income ETFs, and I've talked a lot about how I like JEPI, let's see how that's performed comparable to these over the last year. So let's add one more in here, and let's going to go with JEPI, JP Morgan Equity Premium Income ETF. I'm going to drop that one in here. So now we got the green line, which is JEPI. So again, this is over a 1 year period, and you kind of see JEPI here is at about minus 2.5%. SCHD is at 0.5%, and VYM is up at the very top at 2.24%. So again, they've all outperformed the S&P 500 this last year. Now, I find it really fascinating because in these down markets, how do things perform? So now again, over year to date, over this difficult, first almost 8-9 months that we've had of this year, you kind of see VYM has been the best performer of the group. JEPI and SCHD, virtually the same performance, and all three of them have outperformed the S&P 500, which has some stocks that are going to be very volatile in there. So again, we're mixing up a cocktail, and I think from an income perspective, if you're an income investor looking to strip some of this off, charting like this really can help and kind of illustrate to you how these things are doing. Again, now this is total return, so if we go over to price return, it's going to look drastically different. So we do have again, we want to account for tax situations and things like that in your age, and do you need this income when we start talking about income ETFs? All of that is very important because again, price return, we start to see again very big changes. JEPI down 10%, SCHD down 8%, VYM down about 6%. It's when we factor back in those dividends and stuff like that, or that distribution yield, I should say, that it changes it quite a bit. So after reviewing SCHD from Schwab, does this have a place in our income portfolio that we've been talking about? And I say yes. It's a great foundation ETF that you can have in there. It's not going to have all the volatility that you're going to have in some other ETFs. So looks like from those charts that we can count on this one to strip off some income, and it's going to hold our basis pretty well. So how would I play this? Well, I would dollar cost average into it. Wait, we're going to dollar cost average into it. Remember, we're going to buy this every single month. We're going to build up this position, and over time, that's going to be able to pay us off those nice big quarterly dividends. And don't forget, those are going to be qualified dividends. So when we're comparing this to something like a covered call ETF, well, this is going to be very tax efficient compared to that. So always consider that if you are paying taxes on this, if it's in a taxable account, and just how much you're going to get to keep after tax versus those. So keep that in mind. Now the part you've all been waiting for, the income ETF showdown. Now, JEPI has been holding down the number one position, but now we got SCHD nipping at its heels. And so where do we put this? Well, that one's hard because I think it really depends on your age. So I don't know what the transition point is for you. Maybe it's 60, maybe it's 50. But let's use 50 for our example. So if you're under 50, this goes right to the top, I think, SCHD. Just like I'd put VOO up over JEPI. But if you're at that position where you want to start stripping off some income, well then, I'm probably going to put JEPI just ahead of SCHD. So that's just my feeling. So without further ado, here are the rankings. And again, this is just my opinion, but this is how I would stack them up here. So JEPI, SCHD, and DIVO are the three that I do own. And if I was going to build out an income portfolio, that's probably the order that I would put them in right now. Now, JEPI, I've talked about that one. I'll link a video above. Yielding over 9%, SCHD yielding just 3.26%. But qualified dividends, much more tax efficient. Also, DIVO, same thing. It's going to pay out some dividends, but it's also going to have some of those covered calls in there that are going to be taxed higher than those dividends that are going to come naturally through. So keep in mind those tax situations, but I would buy all three of those. And SCHD, I would still have quite a few shares of those because during those bull market runs, that's going to outperform those other two. Now, if you take all three of those and you average them out, I get a 5.77% for those three that I said yes to. And again, the other three I don't want to own right now in my own personal portfolio, but those three I do own. And if you just did equal weighted across the board, 100,000 of each, you'd be getting 5.77%. So not too shabby. Again, if we're talking about the 3-4% rule, Well, look, you're hitting a home run here. You're getting 5.77%. Figure out your tax situation and see how you do. But that's my current order. Again, like I said, you could flip SCHD and JEPI depending on your own personal situation, and I think you'll be doing just fine. If you have any questions on any of this, please ask down below. I really appreciate you watching. If you like this type of content, please like and subscribe. Also, if you've got an income ETF that you would like reviewed, please throw it down in the comments. We'll start the conversation. Now, thanks so much for watching. Have a great night. Take care. Whoop.